Geoffrey Hinton compares the AI era to the nuclear age, emphasizing the urgent need for global cooperation to manage its risks. He calls for thorough experiments to deepen our understanding of AI and advocates for international treaties to prevent misuse, especially in military applications. In the financial sector, regulatory frameworks are crucial to ensure AI operates transparently and aligns with human values. Recent developments show promising progress. The European Union's AI Act, effective in 2025, prioritizes transparency and accountability in financial AI applications. The Digital Operational Resilience Act, or DORA, which takes effect on January 17, 2025, strengthens cybersecurity requirements for financial institutions using AI. International bodies, such as the Bank for International Settlements and the OECD, support strong governance frameworks to address risks like data privacy and algorithmic bias. Together, these measures aim to balance innovation with safety, protecting investors and maintaining market stability. AI is reshaping finance, offering innovation, but also significant risks. As Geoffrey Hinton warns, we're entering an era where machines may outsmart us, making regulation and strategic investing more important than ever. But the future of finance isn't just about machines, it's about choices. Your choices. Invest wisely, demand transparency, and stay informed. Because in this new era, knowledge isn't just power, it's protection. Would you trust a machine with your life savings? Wall Street already does. AI is quietly taking over your financial future, and even its creators are sounding the alarm. Today, we dive into how artificial intelligence is revolutionizing banking, trading, and investing, while posing risks that could shake the foundations of our financial system. Geoffrey Hinton, the godfather of AI, pioneered neural networks in the 1970s at the University of Edinburgh. In 2024, he won a Nobel Prize in Physics for his work, which powers modern AI systems like ChatGPT and financial trading algorithms. But after leaving Google in 2023, Hinton issued a chilling warning. AI could lead to human extinction within 30 years.
Between 5 and 20 years, I think Demis thinks in about 10 years, we'll get something like superintelligence.
Why? Because AI is getting too smart, too fast. He believes AI systems are starting to understand and reason like humans, and without proper controls, they could act autonomously, especially in finance, where they handle trillions daily. AI is transforming finance, making it faster, smarter, and more efficient. The global AI and finance market was valued at $31.54 billion in 2024 and is projected to soar to $249.53 billion by 2032, growing at a 34.3% annual rate. Let's break down how AI is revolutionizing the core pillars of modern finance and who's leading the charge. First, credit decisions. Ginger and Enova. Companies harnessing AI to assess creditworthiness instantly, accelerating loan approvals while minimizing human bias. Next, risk management. Gradient AI and IASTI, using deep learning to detect risk patterns before they become problems, helping institutions stay ahead of volatility. Quantitative trading is also evolving. TrueMid, Tegas, firms optimizing trading strategies with real-time market intelligence, because in algorithmic finance, milliseconds matter. In personalized banking, SoFi, Chime, delivering AI-powered virtual assistants that provide smart, tailored financial services, 24/7. And finally, fraud detection and security ascent, and Order.co, guarding billions in transactions with AI-driven fraud detection, because cyber threats never sleep. Together, these innovations are redefining how we bank, trade, and invest, building a faster, safer, and more intelligent financial future. For example, JPMorgan Chase uses AI to automate loan approvals, cutting processing times by analyzing credit histories. Meanwhile, 91% of U.S. banks rely on AI for fraud detection, boosting security. By 2025, 75% of banks with over $100 billion in assets are expected to fully integrate AI, showing its critical role. While AI's potential is immense, Hinton's warnings highlight serious risks. He believes AI could soon outsmart humans, acting in ways we can't predict or control. In finance, this could be catastrophic. Imagine an AI trading bot misinterpreting a geopolitical headline and selling off billions in milliseconds, triggering a flash crash. That's not science fiction. It nearly happened in 2010, and today's AI is far more powerful. Hinton also warns that AI could manipulate decisions, drawing on vast data from literature and historical strategies. Job displacement is another concern. AI is automating tasks like financial analysis and customer service, potentially cutting jobs. A 2025 report estimates AI could replace 300 million jobs globally by 2030. The black box nature of AIs, where its decision-making isn't fully transparent, raises ethical issues. For instance, biased algorithms could lead to unfair lending or discriminatory hiring in finance, making regulation critical. As AI reshapes the financial industry, investors are adjusting their strategies. Many are diversifying into sectors less impacted by AI, such as renewable energy or real estate, to mitigate disruption risks. Others are closely monitoring regulatory developments, since new laws like the EU's AI Act could influence the valuations of AI companies. Some investors are exploring opportunities in AI-driven firms like Ginger or Trumid, while remaining cautious about ethical and sustainability risks, aware of the challenges in balancing innovation with responsibility.